I love helping traders become profitable because I know what it's like when you're struggling, when you're in that period where you've really been working really hard, learning the charts, learning your analysis, learning your strategy, doing all of that back testing. We know all the work that goes into it. Yet you always seem to get to this point where it feels like you're about to make it, and then there's losses, there's draws downs, and often you're on the cusp of feeling really good, feeling really positive about it, feeling like you're right there, and that's normally when you also blow an account. If you're in that phase, you're not alone. We've all been there. And for me, it was just so frustrating because I worked so hard at hours and hours and hours with the charts, with my analysis. I always felt like I was doing things right. And I always felt like when I figure this out, I want to show other people how to do this because it just shouldn't be this hard, is how I felt. So I love helping other traders become profitable. But the thing that you have to realize if you're still in that phase is that 95% of traders don't make it. They fail. And there's a few reasons for it. One is there's no barriers to entry. So you get a lot of people coming in to trade, wanting to make quick, easy money. I think they're better off going to the casino. They just want it to be a lot of money. So there's a lot of kind of greed, and they don't want to put the work in. Okay, so we know that that's not you. You're putting the work in. You're learning the charts. You're like, okay, I'm already different from a huge amount of traders. I don't know what that percentage might be. I think it's be quite a lot. The majority of traders I don't think put in the work. Okay, so you're in that category where you've put in the work, but you're still struggling, and it's really frustrating because you feel like, okay, I'm not here to just gamble. I'm not overly greedy. I don't think it's easy. I'm working really hard. So why is it not working? Okay. So the next shift you need to make in your thinking to differentiate yourself, because in trading, you cannot follow the crowd. You cannot follow the crowd in the way that they think because they're not thinking correctly. They're not doing the correct things because otherwise the failure rate wouldn't be so high, right? Is that we've got this idea in trading that it's fast-paced, aggressive. There's that kind of I don't want to say Wolf of Wall Street, but I'm going to say Wolf of Wall Street. It's a little bit like balls of steel. You need to just be almost like a top-level gambler and hold your nerve. And the idea is that day in and day out, you're showing up to the charts, and it's a very active, exciting activity that you've got to be in there fighting for it, and you know the more aggressive, the more you can handle stress, the better you're going to be. But actually trading is quite the opposite. The reality of it is quite the opposite. The reality is very, very boring. And when your trading becomes boring, it's a good sign because it's a sign that you're getting way closer to the reality of it and to profitability and success. So day in and day out, trading is really boring because you have to actually be very disciplined and you have to be very consistent and you have to show up and do the same things over and over and over, no matter how you feel, no matter your kind of instinct about the chart, no matter anything. You've just got to show up and do the same thing over and over. See trade, take trade, see trade, take trade. Don't see trade, shut down the computer, don't take trade. It's very boring, and you should enjoy that boredom. You should enjoy that process. You should be tied to the process of showing up, to taking out your rules, to doing A, B, C, D, whatever your routine is. You need to be loving the routine. You need to be loving the boredom of it, and fill your time, because you'll have other time, right? It gives you, when you're operating like this, and I'm about to show you what I do on a daily basis. It's for a lot of people that don't find trading interesting or enjoyable. They're just going to be like, I can't believe you do this every day. But I love it. I've actually loved the journey. I've loved the struggle. I'm glad I figured it out. But I've just, since I started and since I made the decision I wanted to be a trader, I've loved the process of it, the challenge of it. But the reality of the challenge is way different to what I thought even 5 years ago, how I thought my days would look. They look very different. And when I've ticked off my daily processes for trading, I either maybe pick up a new strategy I'm learning or testing, and I'll go and do my testing, my data analysis. I'll improve things. I'll do something. I never just ad hoc trade. And I've started other businesses on the side. I've taken up other hobbies. I feel my life's very fulfilled. My days are very fulfilled because my day isn't just trading. Trading's a part of it. And when I do that well, i.e. I show up, do my processes, just follow the ding, ding, ding. Sometimes it takes 10, 20 minutes because there's just the going through the motions and, seeing, is there a trade? Isn't there a trade? Job done. Other times there are trades, and sometimes I've got a few trades that suddenly set up on the same day, and I've got to go through and make sure that I'm checking everything properly. Those days it's a few more hours, maybe 2 or 3 hours. But that's it. That's as long as I trade for, and most of it is very mechanical, like checking boxes, checking like is it, isn't it, isn't it. There's nothing exciting. I'm not watching tickers on a chart and waiting for my sniper entry. It's very boring, very boring. But when I finish my trading process, I feel amazing when I've done it well. When I've just followed my process, I feel amazing. And this is a big shift that you need to start making in like what makes you feel good, because sitting at the charts and hoping to jump on it, reacting to charts, if that's giving you a dopamine hit and making you feel good, and then you feel terrible when that trade doesn't work out, or you feel euphoric when it does work out, it's really bad, because you're tied to that. That's what's making you feel good in the moment, and then you either crash or you're euphoric. You need to start tying your feelings of feeling good to following your process, and then you need the rest of your life around you to make you feel good. You can't only have trading you need to feel good first and then bring that to trading. Don't make trading be the thing that makes you feel good or makes you happy. It's not going to. You need to get happy first and then bring that to trading, and you're going to start performing really well. But it is boring. Let's go have a look at the chart, and I'll just show you kind of, what a day looks like for me. I'll just show you one chart. I trade across a few different charts because you'll see I don't always have a trade on every chart. Sometimes I'll go a week with no trades. Today, I've got a trade on every single chart I'm looking at, so it's pretty busy, but that's just kind of my day changes. So let's have a look at the chart. Okay, so we're here on the euro dollar. We're on the 3-day. So my day always starts with just scanning the 3-day chart to be like, what's my trend bias? Now, I've been long on this pair since early Jan, and that trend bias hasn't changed. So my scan of this every day is very quick. I mean, because I look at it every day, I don't really need to, but I like to. It's kind of, I just kind of look at what's happening on the 3-day. It's not very eventful because it's very slow moving. And I need price to come all the way up here, then start going short again, or it needs to start proving to me that here it needs to structurally on the 3-day, which will happen if we get some losses. If my long trades don't work out, after a week or so, you might see structurally on the 3-day it starts to show us it actually wants to go short. So then it might start wanting to range here. So that could happen, but I wait until it happens. I'm not preempting it. I'm not worried about it. I'm just going to trade long, as I have been since January. It's now July. And it's just following its course. So we had very briefly, when we hit this range high here, very briefly we had, I think, 3 days where on the daily it was showing we'll turn around here and go short, and then it proved that it kind of confirmed our long bias a couple of days later, so we went long again. And that's kind of how my bias changes. It's very I just watch what's happening on the chart. So very quick scan, I'm like, yep, I'm still long. We hit this target recently, and I'm taking any long trades because my next target is up here in the gray zone. Okay, I'm just assuming that we're going to trade long unless this proves that we're going to range. Okay, so that's what I do on the 3 day. It's really quick, boring, right? Then I go down to the 1 day, and today I can scan very quickly. So this is the candle that closed yesterday. It's Wednesday, the 23rd of July here. We're in the morning. But this is the candle that closed yesterday. So this is the candle I'm trading on today. And for my rules, this is how long it takes. I can look at this one candle and the candle before it and go, I've got no trades today to take. I've got no setups. Done. I go and I fill out my checklist, nothing to do in the euro today. Okay. Now, that's my day done on the euro dollar. I've got nothing else to do. Okay. But let me just show you yesterday. So I'm just going to put this on a replay of what yesterday looked like. Okay. So yesterday, similar thing. I checked the 3 day and then I came to the daily. I'm taking longs. And for me, this here is a setup on the long. It's a trade entry. It's what I call a trigger event. Okay. And what I then do, the thing that triggers this for me on the daily is that I've got a valid pullback here. This candle with this red dot tells me it's a valid pullback. And remember, my bias is long. So a red dot tells me there's a valid pullback. So I'm like, okay, the pullback has happened. And then we've got some interim candles here that are neither, they're just ranging. So if you were day trading, this is just whipping you out. It's just taking, I think there's a bit of news here. I think the Fed, news, I don't trade news. And these are just interim candles. They're very nondescript. They're just wicking. Nothing closes above anything else, or they don't matter to me. The only candles I care about are candles with dots, because the red dot tells me this candle closed below the low of the previous day, and the green dot tells me it closed above the high of the previous day. Okay, so these are significant candles. When we're trading long, the pullback tells me that, okay, the next long candle is going to be a valid candle. And then I just ignore. Okay, it's 3 days. And then I get this long candle that tells me it's closed above. So this is a breakout candle. And when we've had a valid pullback followed by a breakout candle, that for me is a trade entry. Okay. What I do is I put my my zone across the body of the candle. Now, my rules have, on occasion, there's a few tweaks I do. I'm just going to show you the very simple version of my strategy. So don't blindly follow my strategy based just off this video. Okay, that would be kind of very silly. Any strategy, take the concepts of the strategy and then go and back test it yourself and make your own rules around the strategy. Obviously, you can get the detailed version of my strategy when you subscribe to my newsletter. You can actually access my strategy for really cheap, but you don't need to trade my strategy. Okay, it's better to trade your own strategy or trade the strategy you already have, but just make it simple. Make your daily process of following that strategy very simple, very boring. That's the purpose of this. I'm not trying to teach you my strategy here, right? So I put the zone across, and then I go, my entry is at the 50% mark here, and my stop loss goes there. Okay. And then my target is, you know, what I love about my strategy is I've set my target when I looked at the higher time frame, the kind of overall trend. I already know what my target is. It's up here. Okay. So that's a 15 RR if this trade works out. Okay. Now, that's it. Okay. To complicate the more advanced version of my strategy is I will also do 4 hours and just see, is there any reason why, based on this, is there any specific thing I'm missing? There's no reason for me to adjust this at all based on the 4 hour. I'm happy with my entry. And then I also just check the 1 hour. There's also no reason for me to adjust my entry or my stop loss based on the 1 hour. There's no zone here that's telling me definitely include that, and even the zones here are already included in my entry. Okay, so I'm not going to adjust this at all. That is it. Now this has taken me, and I'm talking through it, and I'm showing you how to do it. I think like 5 minutes, 10 minutes. That's my day. So now I would check my checklist, go, okay, this is what I've entered. This is, I'm just checking facts. So yes, there was a valid pullback. Yes, there was a 1 day entry. Yes, we're trading long. Yes, I've entered at the 50% mark. Yes, my stop loss is at the body. No, there's no reason to adjust it. These are very basic things of my rules. Like if I adjust the entry or the stop loss, I need to just document why have I done that, on what basis, because there are reasons why I can do that, but there's nothing to do here. And then I would go and I'd go, okay, this is a 3-1, so basically 32 pip trade, and I'd go and put it in the calculator, work out how large my trade should be, because my risk is always consistent dollar-wise and percentage-wise. So I just make sure that that's correct. I'd go into my brokerage account, enter this trade. I'd always, after I've entered the trade, so I enter the entry, stop loss, and target, I always go and just hover over the stop loss and make sure that it's the right dollar amount that I'm risking, that I'm expecting, that I haven't made a mistake in the calculation, that I haven't done a fat finger key. And then I've placed the trade. I tick my checklist to say, yes, there was an entry today, and yes, I've placed the order, and I leave it. So today, where are we now? We'll just finish this up. Yeah, okay. So today, when I come, I see I haven't been tapped into this trade yet. Okay. So there's nothing for me to do today. This is not an entry for me. The entry for me is down here. There's nothing for me to do. I'm not going to chase this trade. I'm not going to do anything. My back testing has shown to me, so this is how we trade. This is how my strategy works. Okay, so that zone that I just drew happens because, now where's my, okay, because we've had a let me see there, a down, a break below, okay, then it mucked about here like this, I think, and then we had this break above. Okay, that's my let's go like that. Okay, this is the basis for my entry, right? So we've had a break below and then a break above, and so I've put the blue zone in there. Now that's the zone that I'm expecting, because this is actually a demand zone formed by, because this pattern is actually a break of structure to the upside, and there's order flow here. This is why we trade like this. And I use the shortcut of these red dots, the pullback dots and the breakout dots, to just shortcut. It makes it very simple for me visually to open the chart and see that I've got a trade entry. Okay, I don't have to go down to lower time frame and work out break of structure, blah, blah, blah. This just is my cheap way of seeing, is there a break of structure? Yeah, there is. Okay. So now we know that price can do three things. It can come back and do that. Okay, that's the entry we've put in place. Okay, that's how we're trading this. We're expecting a pullback into the demand zone and then a trade out. Okay, version 1. Let me put that in red. Okay, version 1. We also know that this is just a different version of version 1, that it could go like this, and then this, boom, boom. Okay, it could do that, which possibly it's doing this now. It's kind of like making a run, and what's happening is that they're actually I'll just delete this old one. What they're doing here is they're actually anyone who kind of missed this entry here, because some people entered here based off of this supply zone or demand zone down here, okay? And they're trying to catch the late long trade. The people that FOMO, that are like, oh, I missed it. And that's why we don't chase our trades, right? People that FOMO, their stop losses would be here under this level here, and then they take all of these stops out, go back to the demand zone, fill their liquidity, and then it runs. Okay, so it could do that, or it could just do that first version where it comes back, which it's not actually doing. It's definitely on this path if it's going to come back at all. Okay, so it could do that. We also know that it could do this. So we know that it's now kind of going long. It could pull back, but it could pull back further. It could pull all the way back here, take out all this liquidity, and then run. Okay, so we're going to be, so if that happens, we'll be taken out here, our stop loss will be hit. But we have a second phase entry which enters based on this liquidity. We don't like these in one way because our first trade gets stopped out. But on the other hand, when these trades happen, we enter on a way lower time frame, and these are really good trades because they once they get entered, they run really fast. You can get amazing trades on that. So we don't mind that so much, but we trade for this first version of just the pullback to the 50% mark. And we put our stop loss here because it gives us, our back testing shows us it's profitable. It gives us a good RR. We can't put our stop loss down here because it makes these trades not profitable enough over the long term. And you don't know how long this is going to be. This could go all the way down and back up. So we enter once it's kind of proven it's long again, we enter. But we're not going through those trades today. I just want to show you why we're not chasing this trade, because we don't know what price is going to do. So that's version 2. It could do that. Okay, so let me just recap. We've got just a nice pullback like that. Okay, which it's not doing. We've got very similar because we traded the same, but it could do this, possibly that. I mean, it could do that, but we're not sure if this is going to do this because we're only here. We're only, we've only gone up. We know that it's gone up. It hasn't just come down and tapped us in. It's gone up. It could now come down and still tap us in. Fine. Okay. We've gone through that other version where it's gone up. It could now come down, take our entire trade out, and then run. Okay, and we'll have an entry for that. Or it could just as well do this and just keep going. Okay. And then we don't get an entry on the specific trade. Okay. Now, for these trades, you can actually, on any of these setups, trade on a lower time frame and trade on the daily. So use like a 200 MA that's maybe running along here and enter on these bounces once it's bounced. That's a strategy in and of itself to capture these ones where it doesn't come back to our demand zone, okay? But that's a different entry. It doesn't mean that we should take this trade and start chasing. It's a totally different strategy, and I'm not trading that strategy today, and I'm not trading that strategy this week. I'm okay if this trade runs away from me, because chasing it, either I'd have to do this now, and that's a way bigger risk reward. Look at my IRR, it's down to 3. It's not worth it. And these trades often get tapped in. Like, I've done the back testing. I'm very comfortable that these trades often get tapped in. So I've kind of shown you the basis of why I'm trading like this. But my point here is look how fast my daily process is. It's really boring. I would then tick and be like, okay, I've done everything. Today I'm like, there's nothing else to do. My order's still open. My day is done. I closed my computer. I'm not worried about this. Either I'm going to get tapped in and this trade's going to run to my target, or I'm going to not get tapped in and it'll just run without me, or it will tap me in and take me out of this trade because it actually wants to come all the way down here and grab more liquidity. There's a lot of liquidity down here, right? Okay, let's not kid ourselves that this could do anything. Okay, it's out of my hand, but this is my trade. This is worth it for me to put in the risk to see if this will work out, because when these work out, and they often work out, we've been taking trades like this throughout this run up here. We had enormous profits running up here. When these work out, they work out, and when they don't, there's a new setup. It's not for us to sit here and hover and worry about our trades. I can now go off. I've actually gone through all my other charts. They're all similar to this. Okay, I go through 5 different charts, 5 different pairs. That's it. That's the only thing I trade. And when my day is done, so they all take about this long. This is pretty fast. I go off. I'm going to go off and do other things. And go. I need to take my dog. I want to watch the football game. There's stuff for me to do. I get my happiness from other things, not sitting here hovering over the charts. It's boring. It's boring, but it makes me feel amazing. I love the discipline. I love the process. I love the boringness of it. So if you are still struggling, but you're working really hard, don't stop. You're almost there, but you need to start just shifting to what you think trading is to what it actually is. And it's not excitement. It's not balls of steel. It's boring discipline, day in, day out consistency. And there's a way, if you're not a disciplined person and you're not the most consistent person, there's ways to become that. I wasn't very consistent. I wasn't very disciplined. I've never been a disciplined person. I'm a very disciplined person now. You can learn to be whatever. You can be whatever you want to be, you know. I do help struggling traders. I do one-to-one coaching. It's not right for everyone. I'm not necessarily going to be the right coach, and you're not necessarily the right coachee for me. So it's not for everyone. We kind of have an onboarding session first and a deep dive session first, and then decide whether we'll continue with coaching. So you can get a lot of value from just that. But coaching isn't right for everyone. I can only work with people that I think will really benefit from it, because I want you to succeed. You might just not be in the right place for coaching, but you might be. This might be the last little cherry on top you need to get you to where you want to go and to become profitable. But I hope you found this helpful, interesting, and start making your day-to-day routine, your trading, as boring as you possibly can, so that you can cut off that dopamine hit of the excitement, the adrenaline of being reactionary to the chart, because you cannot sustainably become a profitable trader that way.